Hello, 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 everyone. Happy Monday. How is everyone doing? Good morning, John. We can look at AMD if you remind me, but I don't want to do anything in relation to the slice stuff again because those aren't always all my things. There are also uh, Bob and Jimmy's, so I don't want to comment on that. And also, a lot of people don't subscribe to that, so we can take a look at AMD though if you want. Good morning, Bull Strike Cheetah. Good morning, Sterling. Good morning, Patrick. Thank you for putting in all the news. Good morning, Kevin, again from Lakeland, Florida, where I spent some years of my youth. What else do we have? Thank you for putting all the OPEC stuff. What else? Israel's Prime Minister Netanyahu, Israel's on the way to destroying Iran nuclear and missile threats. Well, at least they've taken out a lot of the missiles, a lot of stuff so far. Good morning, McRangers. Good morning, PTP. I didn't know that. Massive call buying on Friday pushed the put skew ratio. That doesn't surprise me. This market is just so complicit. So complicit. I'm talking about the futures. By the way, this week we have, well, besides the Fed meeting on Wednesday, we have a quarter. We have option expiration. We're rolling today in the financial futures like the S&P and NASDAQ. We're rolling tomorrow in the Russell. We also have the big option OPEX, quarterly OPEX on Friday, and the Fed meeting, so you cannot sleep in during this week. Good morning, Anissa. Good morning, Royal Palms. So, there you go. 618 FOMC and VIX expiration. You guys got to remind me. If you put them in the beginning, I'll forget. Yeah, markets closed on Juneteenth. I forgot to mention that. Thank you for putting that in there, Sterling. Juneteenth. So what is that? That's Thursday. So we got the Fed meeting, then markets closed, and then we have the OPEX on Friday. Yeah, there you go, OPEX. And it's quarterly OPEX. Hello, Charles. Good morning, Tony. Hello, Daniel. Good morning, Mark. Again, thank you, everybody, for tuning in. Thank you for everybody in the background watching. What else? Did anybody watch the U.S. Open golf tournament this weekend? What a finish yesterday. What a finish if you did watch it. That was pretty good. And we had the Formula One Canada Grand Prix. It's George Russell winning. So it was a good weekend for sports. We still got the Stanley Cup going on. We still got NBA Finals. But separate from that, since this is a trading and investing channel, we'll get into the markets. We had the Empire State Manufacturing Index coming in well below consensus and below previous. What else do we have coming up this week? We got retail sales tomorrow. That's the big thing. And then we got industrial production and manufacturing. We got mortgage stuff as always on Wednesday. And then we have the EIA number. And jobless claims are coming out Wednesday because of Juneteenth on the Thursday. Jobless claims are on Wednesday, day early. And then you have the FOMC. It's a pause. It's going to just be what's said during the press conference. On Friday, again, nothing on Thursday. On Friday, you have Philly Fed numbers. You have the Consumer Board Leading Index. But more importantly, we have June OPEX. June OPEX. So, a shortened trading week. You know, can't we just make holidays either Mondays or Fridays, though? Can't we, please? I do not. I don't want Thursday off and then come back on Friday. It's buy everything. It's buy everything Monday except oil. It's buy everything except oil and Oracle after its big run last week from earnings. But it's buy everything. Buy all the mega caps. Groups. Everything's up except energy, with consumer, cyclical, and technology leading the way. Pause for Wednesday. Pause still priced in for July. Fear and greed still in greed mode. Schiller PE 36.52. In terms of earnings, I don't know why that popped up. In terms of earnings, what do we have? We have nothing. Kroger on Friday. There you go. CarMax, Kroger. But yeah, I mean, you got just minor things. There we go right there. All right. So contract roll, by the way, this is where it gets tricky when you're in mid-pattern. Here's what it looks like just on September contract. Technically, the wedge on the September contract is not invalidated yet. Okay, but it's not looking good. Here was your wedge pattern. It triggered, got to the bottom of the rotation zone, and so far rotating back up. Here, if you're just looking at the September contract now, you're going to be watching 60.72, 60.72.50. That's going to be very, very key. Again, market shrugging stuff off just based off the continuous contract with the roll. I mean, now we're above the highs from the June contract, which is partially due to the repricing contract roll. And the key levels that I'm watching now for this, let me see here. Let me see real quick. I'm watching 60.93 and 6.111. 60.93 and 6.111. Good morning, PMG. You're a recreational golfer. What'd you think of the ending, Mark? And the Club World Cup football soccer started on Sunday. Yes, it did, Charles. Good morning, Dean. All right, so based off, this is where mid-pattern, I got to just watch the September, but really, I was watching anything above 60.50 for, all right, we might snap back this week, and I got to go again short-term bullish because the rotation zone is held, but that makes Friday's low really, really key. We still have cycles turning down on the daily and trying to roll over on the weekly. But look at this big. This is really just continued wedge higher. We'll see. I mean, is it going to try to eke out? I was watching I had a more bearish outlook going into this week based off of Friday and the wedge, but it looks like it could get invalidated relatively quickly. All right, that's why you got to trade what is, not what you think. And if things change, you got to change with it. And you got to take your stops when stuff gets invalidated. NASDAQ, the contract roll, you can see the NASDAQ still weak. Here, where's the NASDAQ? The NASDAQ not yet to new highs. Here's your contract roll. Here's just a September contract. Again, if you're just on the September contract, the key thing to watch is 2287. All right, and Friday's low is going to be key. That's what's going to be key this week. Let me just jump back to here. For intraday today, it's now above a pretty key support level at 60.56. So watch 60.50 to 60.56 on any pullback. That is going to be key in the S&P. On the NASDAQ, it just got above. There's a very key level right here. Just got above 2210. So 22,000 to 2210 is key. If we do break through that, then here's what I will be using. I will be using these recovery harmonics in the short term. So I'd be watching about 21,880. Let's zoom out to the Dow. The Dow, which is also a contract roll. I'm not going to do the Dow individual contract. It's still in consolidation. There's not been a lot of great trading in the Dow. Key level I'm looking at is 43K and Friday's low. Friday's low to the downside, 43K to the upside. The Russell, which is a roll tomorrow. All right. So the Russell, which is a roll tomorrow, but before then we have 2,133 and then 2,148 to the upside. Friday low being very, very key. The VIX already dropping back down like nothing's going on in the world, but not yet near recent lows. That's why on these VIX pops, you don't want to get greedy. You don't, with this market's still very complacent. You want to at least, I'd still leave something on. Can't give you a specific trading advice, but I'd leave something on. But I like to unwind a portion of it because if the VIX collapses back down, fine. At least you took something in. Good morning, Harold. How are you this morning? The DAX, the good old DAX. Remember, DAX does not roll. The DAX does not roll until Friday. All right? In the short term with the DAX. Change the color of this real quick. Let me change the color of that real quick. In the short term with the DAX, we might get the first cross rotation zone. So I'm paying attention to first the 37.5, 23,750 area right near a breakdown low. And then roughly around the first cross rotation zone, 23,850, and then 23,905 is very key on any bounce. Friday's lows, if we do take that out, come on, harmonics. We're looking at very key area 23,135, and then I gotta fix something here. And then we got, let me see here. Let me just take that off. Then we have 22,993, so 23K. The notes, the futures dropping back down a little, but it's easier to see the yield. The yield back in this huge consolidation range. Huge consolidation range. So, nothing to talk about there. Thursday tried to break down. Friday bounced back a bit and back in consolidation. 30-year climbing again. Paying attention to this corrective channel in the short term. I want to see where we close today. Going into the Fed meeting, if we break back above about this 4.98 level. Dollar index. Little snapback on Friday, trying to rotate back down. Rotation zone is still in the way. Is there a bottoming pattern yet? We had this little mini double that played out, and now we're coming back down to a potential triple bottom. So my level's still 97, 96.50, 95, 98, so 96. We still do have the potential major double bottom if something were to shift, and the dollar is still getting very lopsided. Literally, so much of the market is priced for further declines of the dollar. There could be a washout move, but something could change with this. That's why I'm paying attention to that a pattern in the longer term. Crude. So last night opened up near that 87.5 level, and the very key highs, the very key closing high back from mid-January, and now we've set up this. We've set up a potential double top. You can see it right here. We've come back down. Now, if we rotate back up, then it would be invalidated. But if we close, at least on a 4-hour basis, below 70.84, we've triggered a double top. Targets for that could be back to 67.50 roughly, 65.85, 64.19. If we zoom back out to the daily chart, I'd be watching really the first and second target areas on any pullback. Not much to talk about with natty gas. Still watching is above 3.81. Otherwise, that's key resistance. Gold, little reversal. We reconnected with the 87.5 on Friday. Little pullback, still anything in the daily rotation zone, watching for short-term rotations back up. Silver, we do have a potential double top in silver. It would need a daily close. It is against the rotation zone, so it's got kind of the lower probability ones, but a close below 35.58. What else do we have? We have the euro. The euro still has a big potential double top in play. You can see it there. In the short term, though, if we break out and take out last Thursday's highs, 117 is the first key target. Spiders. Again, you can see here the wedge pattern will still technically be in play until it takes out Wednesday's highs. If you're watching it, though, in the short term on the spiders, pay attention to 601.47 on a closing basis. Okay? We're going to gap up to 671. On any rollover, I'll be watching Friday's open at 598.50 for the first key support. Other than that, you have very key support at 600 on a minor pullback. The Qs, the key levels to watch here. This is the one time I like doing analysis on the spiders and the Qs a little more in the futures because, again, you don't have the roll thing, so the patterns hold up a little better. 532.64. We're going to gap open to 530.90s. You got to pay 532.64 on a closing basis. Key resistance in going into the open, 531.30 about. Support levels, minor support, you have some minor support levels around 530, and then it would be for the potential gap fill to the open first on Friday, 527.68, then the close, 526.96. The wedge pattern, since we have all that going on, I'm using a more aggressive stop personally. It's a play. I'd rather be cautious with with the market still trying to shrug off everything, and we couldn't even break down again with more follow through and everything that's going on in the world. Again, no breakdown, follow through. I mean, if you look at this, you'd think nothing was with the S&P. Oh, 1 day dip back to the bottom rotation zone. Buy it. So, yeah, I'm going to be watching today for the daily close above here. The daily close. I'm not going to be overly, but if we start holding at those levels, that's going to be very key to me because we could retest. We could maybe even come up, rotate back up here and make this little minor. It's going to be sloppy on the 4 hour, but you can see it on the daily. If we then tomorrow rally back up, you got a little minor double top and then the breakdown pattern with that. What else? Well, I think the market's more price to perfection. Now, the market has a wipeout. You'll see some liquidation in gold, but the market is priced per perfection more than gold. Looks like the 1 hour JP US dollar Japanese yen is 1 hour head and shoulders with upwards sloping neckline. We'll trigger if the bar closes. We can take a look at that real quick. Then please put in the stocks you wanted me to look at again. Yeah, it does. There's a nice 1 hour head and shoulders. Little extended shoulder there, but that's pretty nice. If you're looking at that, here's what Sterling's looking at right there. I'd also be looking at your retracement harmonics and see how those levels combine together. So remember, for the head and shoulders with the upward sloping neckline, you have to go for where the neckline was broken, which the first break of it was here. Now it's following through with the close, but here's where the first break was. Oops. So really, I'd be watching this 143.62 to 143.52 levels. All right, what else do we have? The weekly double bottom XYZ pulled back some last week. It also is 1 hour potential double bottom XYZ. Yeah, it's triggered out. It virtually hit the first target. Remember, 66.50. 2. What do I say when we have a target around there? It's a round number, 66.50. So I always make my first target just in front of that. So it's getting a little pullback there. We also had AMD. AMD, nice little pullback in the rotation zone. Rotation back up. Again, it's found some key resistance at the 200, but watching for a retest of that. All right. And it had the reaction to the 50. This is to me is, it's a rotation, and it's got a percent B buy set up if it closes above Friday's high. TTD. TTD. All right. I'd be watching. I mean, if this continues this breakdown, low close into the gap, the earnings gap, Low close, and you got the gap fill left behind. Stalling at the 37.5 harmonic there. If we flip these around and look for the retracements now, I'd really be watching for the pullback closer to 50% harmonic and the potential gap fill. Is getting oversold, so yeah, if it triggered, it's now got the first cross rotation zone against it, so I'd be patient with this. Look at this. Look at your weekly rotation zone flattening out, but still holding. I'd be patient in this in the short term and be watching for something between the 62.5 and the 50 with the potential full gap fill from the breakaway from earnings. Then I'd be looking if there was a long reentry potentially. Yeah, we looked at AMD. Tesla, if I have time. Tesla. Tesla does have a little mini double top. It's not invalidated until it gets above 340.92. Okay. Other than that, the key level is 332.27, and this closing bar was 332.20. So technically no close above the 62.5 yet. Okay? Could do that this morning, but that's what I'd be looking for. Because then if it continued to rally, 340.92 takes off the double, and then you could see easily 344.09 and a return to 355.90 to the upside. Amazon. Would I consider the last target hit? Are you just talking from the double? The last target's not officially hit. The second target was hit last week, but the last target on Amazon is still not. Are you talking just the targets I'm calling out in here? Because I'm not going to comment on other targets from Slice. But in here, we got the last official target is a 223.92. If you're going from the conservative side, though, then no, it didn't hit those either. Okay, and I would technically be using the conservative side, but this is the one we've been following. All right. All righty. Let me look at this again going into the open. If you're going into the open, pay attention to about 60, 65. And below that, if it did pull back and we lose the 15-minute rotation zone, I'd be looking closer to 60, 55. Remember, I shifted to a short-term bullish once it started getting above 60.50 again last overnight. So that's where that sits. What else do we have? Broadcom, which I'm still watching. We had the little pullback on Friday, but I'm still paying attention to see if we get above. Remember, this was a percent B buy and a rotation zone buy. Still watching to see if we get back above 256.31. All right with that. Okay. You are welcome, John. Again, everybody have a wonderful. Even though we have a holiday on Thursday, it's still going to be a very interesting trading week. So we shall see what happens, but we still have, you still have the Trump factor going on every day, and we still have the conflict in the Mideast, and it doesn't look like either side wants to let up anytime soon, but the market's saying, yeah. And pay attention, even if you don't trade crude, pay attention. Crude's a big one on my radar screen this morning. Crude is a big one in case this double does trigger. Because that's really shrugging off everything and saying, okay, all right, back to normal potentially. So we'll see about that. So even if you're not trading crude, I'd keep an eye on crude. You're welcome, Anissa. Again, I will be back here tomorrow. Hope everyone has a wonderful trading day. Bye for now.